Thank you much. Appreciate it. Let me bring in now Gene Marks, president of the Marks Group. He joins us now from Philly, I think, to make some sense of what we are seeing. Gene, thanks for being on from my hometown. Appreciate it.
Sure, Hallie.
So you're at home.
Great to be here.
Yeah, thanks. So if you, let's say you're not an investor, you're not a hedge fund person, you're at home, you're watching this, you're freaking out about your 401k. Should you be or not?
No, you really shouldn't be, Hallie. I mean, first of all, look, the best investors.
Wait, did you say should or shouldn't be?
No, you should not be freaking out. I mean, in fact, I don't think you should be paying attention to all these crazy, swings in stock prices over the past couple of days. I mean, it is a little nuts to see, and somebody on Wall Street is making a lot of money, I am sure. But, the smart investors are always looking ahead. And the bottom line is this. The economy, Hallie, the fundamentals are still pretty strong. I mean, GDP is still forecasted between 2.5% and 4% next year. Unemployment is low. Interest rates, inflation, relatively low. Consumer confidence and small business confidence, although they've dipped a little bit, they're still historically high. You got to look forward into next year, though. And there are some concerns that you want to be aware of. I mean, trade concerns, the president's behavior and statements that he's making, and interest rates rising in 2019 are a concern. Does that mean you jump ship and sell all of your shares? No. Are most economists predicting a recession to happen in the first half of 2019? No, that's not the case either. Look, you want to have a professional money manager advising you, and you want to be in it for the long term, right? You want to look, when you're investing in the stock market, it always exceeds the return on investment of most other type of investments as well, but you got to be thinking long term. And these kinds of days of volatility, you just got to kind of shrug it off and, I don't know, focus on watching a good Christmas movie.
That would be nice. Talk long term then, what you need to see from Washington, what you would want to see from the president, from political leaders, particularly as we're in the middle of this shutdown. If you're a member of the middle class, if you're looking at it, like you're talking about some of these portfolios.
You want to see a lot less haggling and a lot less of the nonsense that's been coming out of the White House of late. A lot less of arguing with our economic leaders, and a little bit more leadership from the White House. That's what you want to see as an investor, and that's what Wall Street wants to see as well. But you know what? Don't discount the effect that interest rates have on things as well. I mean, Ali, interest rates right now, they are the highest that they've been in the past 10 years. And you know what that means? It means options for you and me and other investors. I mean, a few years ago, where else would you put your money but the stock market? Now, savings accounts are going up. You can invest in bonds and municipal bonds as well. And that means that as investors, particularly as older investors as well, we now have more options to put money away and get a little bit more of a return on investment. So. Don't be surprised to see, the market itself decline a little bit in 2019, and try and ignore all the rhetoric going on in Washington between, what's coming out of the White House and the Federal Reserve. You want stability, and you want long-term, more rational behavior. That's what you want.
Gene, real quick, I'm almost out of time. Sears, right?
Sure.
American staple, closing its doors apparently. What's up?
Yeah, I don't know. Sears are still in business? I didn't even realize that. I thought they closed their doors like 10 years ago.
Man! That's a
Who
burn,
goes to Sears
dude.
anymore?
All right.
Yeah.
All right.
I don't know. I mean, they've fallen a little bit behind. Not a big surprise to most of us that follow retail stocks.
Of course. Yes, not a surprise indeed. Still worth noting. Gene Marks, thank you much. I appreciate it. Coming up,
Thanks,
Empty House.
Take care.
Crickets.